Hey guys, real tough week of trading here. So we finally got our trend day. Put about a $5.50 range in today. So interesting enough, I mentioned it in the written TA. I wasn't able to do a video last night, but I mentioned the written TA that this is the first time in almost 2 years that we have had a green quarterly option expiry day. So that's very impressive to say that, 2 years that every single quarter options expiration not only open red, but closed red. So breaking that trend is very interesting here. So a lot of things to talk about here. So let's go ahead and get right into it. I've been mentioning this cup and handle for a couple days now that could have possibly been forming. I was eyeing it right about down here. If this cup and handle is playing out, then we have an upside target of right about 411 to potentially as high as 417. If the cup and handle plays out and we hit 411 before we retrace, then our retracement is going to be right here about 400. However, if we can push as high as 417, then we might only retrace to about 405 before we bounce. So I'm definitely keeping this in mind, this pattern, and that is what my intentions right now are. The market obviously is in a bullish push right now. From a supply and demand standpoint, we pretty much are just stuck between two supplies at 405.2 and 414 right now. The daily says we will establish a new supply soon. The question is when. So obviously there's no timeline on that, and I can anticipate it, but I cannot predict it. So basically, as of right now, momentum says up. So our target should remain somewhere between 414 and 417 until we get a new supply. Now, all we really need, because we actually at the beginning of today, even though we were green, we're attempting to put a new supply in. All we really need is a red trend day, or not even a trend day. Just a red day. So if Monday comes out, and the bulls can take us down in this 405 to 407 area, this 409.4 is going to become a supply of resistance, and that's going to start the sell-off. And this could just be a very short cup and handle. So we could actually put this 409.5 in as top, and then we could probably come all the way back down here. Now, something that's very interesting is the fact that we have three back-to-back gaps. So we have this 396.5 to 398.7, and then we have about 401.6 to 401.76, and then we have 404.35 to today's gap of 404.55. So we have about a $2 gap right here, and then about 10 to 15 cents for the last 2 days of gaps. That is three back-to-back gaps that have not been filled. I honestly cannot remember a time since that has happened. Just off the top of my head, I would say it'd have to be back sometime in March probably, or maybe June. But that's very rare to see in the markets. Now, does a gap have to fill? Technically, no. However, it almost always does. So a gap, if you guys aren't familiar with it, is just exactly what it sounds like. It's a gap in price action. So here on Tuesday, our high of day was 396.49. The next day, we opened at 399.93 and only retraced from 390 to 398.68. That means there is about a $2 gap right there. What that means is for these $2 from 396.49 to 398.68, no orders were filled if they were a limit order. That's why this is important, because those orders have to come off the books. And if those orders get skipped, it will come back down for them. So it's kind of complicated, and it's one of those things that you just got to kind of watch happen to understand them and why it makes sense and why that gap in price action kind of leaves an imbalance in the market essentially that has to be corrected. Now, has there been times, because we had a gap honestly on the chart that we filled from like 2021 or something last year, or 2020 even maybe it was. Can those get left on for a very long extended period of time? Absolutely. However, I would say recently that upside gaps, so this is if say we are on a bear trend. So if we were to have gap down 3 times in a row, those gaps are more likely, because we actually just filled today this gap right here from 408.14 to 407.51. So we did just fill this gap, and that's what I mean. So when you gap down, there actually is a higher chance that you're going to leave that gap because price naturally rises. So it will come back to that price eventually. Now, when you gap up, though, trend in general for the market is always up. So that's where it gets more complicated and why it's more statistically probable that we will fill a gap. Now, I used to be able to say that 2 to 3 days and a gap would almost be filled if it wasn't filled intraday. But since 2022 happened, I mean, there were some times where we had like 14 to 15 days before a gap was filled. So hard to put a timeline on it, but it's definitely something to keep your eye on. So going over to the weekly here now, we have a really, really nice 375.7 to 407.3 channel. This red channel, this is going all the way back to right here in April, May of 2022. That almost all of our price action has happened in this red channel right here. Now, the only 3 times that we have broken over that level since we lost it, we closed 1, 2, and then the next week 3 we closed below. So we had 2 weeks close over. Here we had 1, 2, 3, 4, and then boom, closed under on the 5th. And then most recently we had 1 close, 2 close, 3 close, and then we dropped. So on average, we're only spending about 3 weeks total over 407.3 before we retrace. So that would mean this is 1, and then we could have 2, 3, and then we're going to need to be back under 4, or could be back under 407.3. So this is where it gets interesting, because you have to play the favoritism of we're in a bull trend, obviously, but where are we going next? Now, what's interesting here is that we did fall just shy of the 410.1 weekly supply. We did not quite get to that level. And we also on the weekly are attempting to establish a new supply before we establish a demand here. So that's the favoritism, is we're looking for a top here. So our next major supply after 410.1 is 427.3. That's all the way back from August's high. Now, do I think we're going to get there? Not really, honestly. I really do think that this 411 to 417 area is probable high. So this is where I'm watching for, is when we put in a new weekly supply, that will be our sign to short this. And most likely we will come back down to at least 407.1. If we break that, then our target's going to be once again 390. You can see almost every single one of these that we have broken over has come right back to 390. Broke over, right back to 390. Try to break over, right back to 390. Try to break over, boom, right back to 390. So the favoritism would be we are going to come back down to 390. But again, the timeline is always different. You know, this one was only 1, 2 weeks to get back to 390. Here we had 1, 2, 3 weeks to get back there. Here was 1, 2 weeks. Here we had 1, 2, 3, 4, 5 weeks. So about 3 to 4 weeks after we break over 407.3, not only that should we be back under it, but we should be back at 390. So favoritism would be that we are going to be putting in a temporary top here pretty soon. Going over to futures here. Oh, sorry. One more thing I want to talk about was this massive rising wedge here. This gives us a support for Monday at 407.6. So realistically, until 1, we put a new supply on the daily in, and 2, we break this rising wedge, we should not attempt a new short. Now, I am still in 28 DTE 400 puts. I still believe in them, and I still do think we're going to be back at 400 in the next month. However, I'm going to wait until this sign happens for me to average down. Or I might just let that position run and then just open a secondary position. I haven't decided yet. I'll decide once the time comes. Now, over on the futures daily here, same thing. We're in a huge rising wedge here. Same thing. Support lies right here about 411.15. So once we break that support is when we should start looking for the dump here. Now we did have a previous 40.96 demand that has been on the books since all the way back here in February. We finally were able to come back up and take that demand out. Same thing here. We are now stuck between 40.55 supply and 41.60 supply. Favoritism goes to we're going to establish a new supply, which then would lead to a sell-off. Now, much like I was saying on SPY here with this huge imbalance, if we go over to futures here, I feel like my futures chart, for just whatever reason it is, my futures chart always seems more clean, but you can see we have 1, 2, 3 supplies down below that need to be taken out before we can comfortably say we're going to push up. Now, there's something to be said that we don't have to take out the supplies. However, even on the 15-minute chart, which is not very common, we have left a ton of supplies all the way from 393 up to current price. So when that happens, not only is there an intraday imbalance, which means that price action didn't come back down to confirm levels before pushing. So in general here, what happens is you come down or you come up here, you establish the supply. Then what you'll do is you'll come back down and take out previous supply and establish a new demand. And then you push up, establish a new higher supply. You come back down, take out this lower supply, establish a new higher demand, and then you push back up and you just continue to basically leapfrog the whole way up. And that is what's I would call a very balanced and strong trend. What's happened here is that we have these massive pushes through all these supplies and we're not reconfirming support or demand on the way up. And this is really shown on the 15-minute chart, which I can't show you because I chart that on TOS and I don't have that up right now. But there's a lot of supplies that still need to be taken out. Now, again, there's no timeline on when that's going to happen, but there's a big imbalance in the market that needs to be fixed before we go much higher, in my opinion. So from here, our upside target is still 41.60 right now. If we hit that or break over that, we'll look for that new supply. And there's a real scenario here where we could hit this 41.77 to really even 41.94 and put a new supply in up here before we come all the way back down to 40.15 to take out all of these supplies that are left. And that's kind of what I'm targeting right now, is that we're looking for a new top somewhere really in this 41.60 to 41.95 area. Weekly chart here, same thing. We have a massive bull channel going right here. We did, at least on the trading view version, did hit 41.38 weekly supply. However, on Thinkorswim, which is where I chart my actual levels I put in my daily written TA, we did not quite get to 41.50 is that target. So we are looking for just a slight push. I don't know really why TradingView and TOS, their futures levels are just ever so slightly different for some reason. And I'm just not sure why. But anyways, so now that we've closed over 40.95 here, the favoritism really does go all the way up to this 41.80, which if you look is the August top and also our next supply. Now, something else to keep in mind here is we rolled the collar on JPM today. New calls, sold calls, not bought, is 4,300, and bought puts is 3860. Now, in general, what I have noticed, the 7 weeks post JPM collar roll is a trend. So we are either going to trend up to 4,300 over the next 7 weeks, or we're going to start trending back down to 3860 over the next 7 weeks. Once that 7 weeks is over, we generally will see a retrace or rebound depending on what direction we had. So basically, if you look at this logically here, the last, really going all the way back here to, like I said before, April has been nothing but consolidation. Anytime we break over 40.95, we find our top very quickly afterwards. One could even say potentially that 41.50 is the actual top. And I might eventually make this adjustment depending on where we find resistance. So being that we're already over 40.50 and almost over 41.50, I would say the odds of a 7-week sell-off starting is much higher than it is that we push up above 4,300 over the next 7 weeks. However, as we saw this week, market's very strong right now. Market's resilient. Market, most importantly, does not believe the Feds. So they still don't believe Jay Powell is going to continue to rate hike, and they still believe we're going to get rate cuts, and a lot of them by end of year. So it will be very interesting to see what happens for the next couple weeks here. Last little thing is the VIX. We are back in the 18s finally. So now that we're back in the 18s at close, as you can see, the last lows were 18.16, 18.11, 17.06, and then all the way back here at 18.01. So in general, once we hit just basically the very low part of the 18s, that's lately where we've been bouncing and finding the bottom of the VIX and the top of SPY. So there is a lot of stuff building here that we are very, very shortly going to be finding the top here on SPY. Bitcoin is starting to look a little strong. We're still in this massive consolidation here, though. Not a whole lot of movement. Bulls are trying to take back the daily 8 EMA. So I hope you guys had a good week trading this week. Very, very tough week. Just giving you guys a heads up. I will be out of town April 8th through the 13th. Markets close or is going to be open. But I'll be gone those days. There will not be any TAs, and I will not be trading those days. All right. Hope you guys have a good weekend.